I'm going to just get this party going. Your word of the day today is emotional. It seems like investors are very emotional about yields going above 5%. What do you make of all this, the Moody's downgrade and the reaction?
I don't make a lot of it, Frank. I think it's actually completely irrelevant, to be honest with you. And it was irrelevant largely in 2011 or any other time one of these rating agencies has come out with a call. I mean, rating agencies should be looking at company balance sheets, not country balance sheets. They're just not really equipped to do that. The U.S. prints its own currency like many other countries, and the idea of default risk is just a really silly idea, to be honest with you. But look, people will focus on it for a little while. It'll be fleeting, and we'll be off to more important things like the budget bill, which, as you mentioned, is probably the biggest story this week and got out of committee. I think the market will focus on that in a positive way. And, of course, the fact that we're back to unchanged or even up on the year in the S&P. Bond yields largely unchanged. And the big story is currencies, which is we're about 10% weaker in the dollar. And I think that story is very supportive for U.S. risk assets going forward into the summer. Let's go back to the tax bill. We've had a number of trade groups come on our air and tell us how important this tax bill is for job creation. Also, just for the president's, momentum. It seems to be very important as well. The expectation is going to go to the floor for a House vote later this week. How important is that House vote passing and moving on to the Senate for the market and investor sentiment? I think it's critical that it got out of committee. It was looking a little dicey, and I think the fiscal side of the U.S. equation just needs to be defined so that businesses can operate and understand what the tax environment is, and consumers to some extent, Frank. So I think it's a big deal. I think the dereg, I think the fiscal side are all in the background positive, and then we come back from a week where the president just inked trillions in additional deals. The investment equation in the U.S., which is strong, just got a lot stronger. And that's just a positive story all around for the U.S. economy. We've been a bit of a lone voice out here since early April, trying to sort of push people back away from the abyss and allowing their emotions to get into their trading and their investing decisions, talking about why this trade story was not as big a deal as everybody had made it out to be. And I think, largely speaking, I feel pretty vindicated by that. So, David, just for the audience's edification, you're very pro-Trump. You're pro the administration, a lot of their initiatives. I would say, Frank, I look at things very much in a cold and calculated way. Look at it how it matters to your portfolio. I'm trying to act as a fiduciary for our client. Fair enough. And I'm looking at them as they are. I'm looking at these policies and going, okay, that's good for my portfolio. Okay. Well, thank you for correcting me, but I got to ask you. Pro making money. Okay. Fair enough. Thank you for correcting me. I got to ask you. Yesterday, we heard from Treasury Secretary Bessent about the trade negotiations and struck a bit of a different term, saying that a lot of these countries, that if they don't feel like they're negotiating in good faith, they're going to see their tariff levels go back to that April 2nd level. What do you think that means for the market? And what does that tell us really about the negotiations and the trade progress? We heard there was a lot of progress, a lot of calls, a lot of negotiations. What does that say to you? I think the secretary's made a lot of progress in the negotiations. He's talked about it. They talked about strategic uncertainty, which I love that term, keeping the leverage in the negotiations with the United States. And look, how many people did you hear, Frank, over the last month and a half talk about how the U.S. doesn't have any cards, they can't get anybody to the table, this is going to be long and drawn out, the Chinese are going to run everything. Everybody's at the table. Everybody's negotiating. Everybody's putting a few $1 trillion here, a few $100 billion there into the U.S. economy. It's kind of working. So let's go with it. Let's get the investment going. Let's get the job creation going. Let's get the tax bill passed. Let's get the dereg going. And let's get stocks moving in the direction that they look like they were meant to be heading from the beginning before everybody got so freaked out about the tariff story. This was a major negotiating